Welcome, dear traders. Although many market players had expected the ISM Services data to be weak, the opposite happened. As a result, the US stock indexes as well as the Asian ones divided down. After a sell-off the day before, the US stock futures managed to stabilize in the Asian session. Now, did currencies react to the upbeat economic report? Watch our video review and find out. The ISM Services Index surpassed market expectations. The reason turned out to be strong, contrary to pessimistic expectations. It means that the US economy keeps expanding despite economic headwinds. According to the report, logistics improved, employment in the service sector increased, and inflationary pressure eased. The ISM manufacturing prices paid index fell to 70 in November from 70.7 in October. Following the release of the Nonfarm Payrolls report for November last week, the Fed received another confirmation of the economic resilience. Could it be the reason for the watchdog to hike rates more aggressively? Judging by the FedWatch tool, traders do not think so. Now, more than 79% of speculators are betting on a 50 basis point rate hike at the December meeting. At the same time, better than expected labor market data and the state of the service sector increased fears that the Fed could stick to a hawkish stance for a longer period. Such concerns may fuel a further rise in the US dollar. In the Asian session, the US dollar index settled at 105.20 versus its rivals. It's a gradually recovering now amid a sell-off in the stock markets and risk aversion. However, it's moving in an extremely narrow range of 105 and 105.5. What's more, the greenback appreciated following a rise in the US Treasuries. It advanced against the euro, the pound sterling and the yen, but was unable to summon success versus commodity currencies. The Japanese yen moved down following a rise in the US currency and government bond yields. On a Tuesday morning, it sharply declined from almost 4 months' highs, falling to 136.80. After that, the downward movement persisted. Meanwhile, the Bank of Japan sticks to an ultra-loose stance. Policymakers are sure it's too early to talk about any changes in the monetary policy parameters. They are also well aware that such an approach increases the risks of inflation due to the weak national currency. Bank of Japan Governor Haruhiko Kuroda believes that this strategy will boost wages, which could help the regulator to deal with the rising cost of living. It means that the chances of the yen strengthening versus the US dollar are extremely low. In the Asian session, the dollar-yen pair was fluctuating in the range of 136.30 and 137.50, moving away from the low of early December located at 133.70. The Australian dollar showed an impressive rise in the morning. However, its rally will hardly last for long. It's likely to subside before the Fed meeting. The Aussie rebounded from a weekly low amid the Reserve Bank of Australia's rate decision. Today, the RBA raised the cash rate for the 8th time and for the 3rd time in a row by 25 basis points. The interest rate now stands at 3.1%. The highest level in a decade. What's more, the tone of Philip Lowe's speech was more hawkish than expected. He warned that the size and timing of a future interest rate increases will continue to be determined by the incoming data. The next meeting will be held in February. However, do not forget that the Aussie is more sensitive to external factors rather than internal ones. So today's trading was an exception to this rule. The AUD-USD pair was trading at 0.6719 despite a fall on Wall Street. The risk of sentiment and the decline in oil prices. Its rally was also facilitated by the news from China about the easing of virus restrictions. This is rather bullish for the Aussie, given that China is Australia's main trading partner. There is no need to say that the Reserve Bank of Australia is less hawkish compared to the Fed. Besides, the Fed may maintain aggressive tightening in the long term. However, it does not matter now. The Australian currency is enjoying its finest hour, rising in the range of 0.6693 and 0.6739. We hope you also have many reasons to be proud of your trading results. That's all for now. Stay tuned and have the latest market news at your fingertips with us. And see you soon.